Welcome to TradeTheNBI.com. This is John. This report is for the 29th, and well, we were talking about 2630 being the target, and that, it could take a little bit of time to get there. Well, it didn't take a whole lot of time to get pretty darn close to it. And the key was, even though we saw that there was a little bit of an increase in short interest over the red DOC, what we did notice was the fact that we still had nice steel, but more importantly, rising shakeout, and the attempt to attack into a rising shakeout not going to work very well. I mean, we've seen that over the past. You need to also have, that added short signal, but I like to look for, when you get that DOC spread, to also have that steel crossing below cyan, which is an indication that short-term buyers are not active in the situation, or aren't going to be able to defend the situation. In this case, you didn't have that. Steel's been above cyan consistently throughout, and that's usually a pretty solid indication that you're going to hold on, which is exactly what it did. NQ, likewise, up at its peaks. No surprise that, the news supposedly was Congress moving along the tax package, so it's going to at least make it to the floor. The question now will be, can they get 50 votes? Is McCain going to go along with this one versus all the others? So we'll find out what takes place there. That allowed the euro to slide back, so the central banks didn't need to continue to pump this at all, because with the news pushing things up, it was an opportunity to lighten a little bit. Still very elevated for the euro. Really shouldn't be where it is, given the relationship between growth and U.S. economy, interest rates. So it's an interesting situation having it where it's at. I know a lot of people talk about the 120s, 125 range being midpoint, but with the underperformance from Europe, seems priced in quite a bit high. So that doesn't really matter at this particular point. It is what it is. We can see the change in it. Bonds also, it's just an odd situation, very elevated for what we should be looking at with rate increase coming. So interesting to see that. And oil, it's not going to maintain these levels, but that's okay. I mean, it was a nice run. You have a little weakness here with the steel, see, crossing below that sign, even though it's below the red. Doesn't make it a significant short, just meant that we were going to fill in some of these positive extremes. They go all the way back to the original part of the breakout, but let me just see them float up there. This is pretty lofty territory. I mean, it got a little extreme. In a lot of cases, not just from the extreme histogram, it got way up there in the D omega with that orange plus 13.5. The last time it did that, all it did was come back and it backfilled some of the positive extremes. Nothing overly dramatic. We're not seeing huge flux. If you see any inventory buildup that's an anomaly, then that could cause a bit more of an exacerbated, because the whole point of oil is to gauge whether or not you have a worldwide growing economy and or even increase in production. And then gold. Again, like I mentioned before, I think the cryptocurrencies are having an impact on gold and how far it can move. It's seemingly a lot more liquid and fast flying in the cryptocurrencies versus the gold, and so it's attracting a lot of attention, and I think it's drawing away from some investment in gold. Here was the intraday. I mean, it really wasn't a whole lot to do. I mean, if we shrink it just a little bit more here, we can go back. We were in this little stall. We ended up with the buy setup that came in right above the 50% line, which, take a look at what that was right back there. Right at the 26 number, was still long from this anyway, and then boom, just exploded up. Finally got to a peak right here, started to look a little overdone when the first orange came through, and then by the time we started to break down with the shakeout dropping below red, you could even have waited until you got a further dip of the yellow below the 15. Right about over here, which also would have worked as well. And it also corresponded to a secondary point where the cyan moving above red. And same price tag. Didn't really big effect. For me, it was just the ABM at this point once it gets to those peaks. I like to lock it in instead of just giving it the range, because I always know that I'm going to get a new signal to go ahead and jump back into it, which happened just a little further down once the orange came back. and then boom, you saw it turn around and shake out, and it was another nice ride. So here we are with matching highs, shakeouts resetting. We've had a couple little soft spots here, nothing too dramatic though. I mean, it's I think been holding up quite well, and we're probably going to get a little bit more backfill into this as we're seeing rising lows, usually caused for a pullback, except for when you're making new highs, which you can see it's doing. So as long as those new highs are being made, it's just going to keep bringing the low higher. And so when we do get that retrace, it's just going to be at a much higher value than it was before. And that's what you look for. So it makes it easy to see it that way. Renewals for indicators will be going out, and we'll be set to continue this run. I mean, we've been just spot on with all of it, and not in a shy way. It just is what it is, and that's, I think, all you can really hope for in trading markets, to have it go this easy, despite so many claims to the contrary, and they've just been completely ineffective and frankly just wrong. So that's okay. As always, though, trade well. We'll talk again later.